Deriving the mortgage payment formula. Our variables are P, how much money we're borrowing, called the principal, N, which is our loan duration, the number of monthly payments, M, which is the value of each monthly payment, A, the interest rate, the annual equivalent rate the bank would give you. But in our calculation, we're going to need the monthly interest rate, which is going to be A to the power of 12, which is the 12th root of A. There's another video explaining where that comes from. So we actually need to set up another variable, a working variable called X, which represents the amount of money we've still yet to repay. So at the start of the loan, we've borrowed P, so it's P. After 1 month, we have to pay interest, which is 1 plus I, the multiplier. But we've paid back the monthly amount. So after 1 month, this is how much we still owe. After 2 months, all of this gets multiplied by the interest. That's going to be P 1 plus I squared minus M 1 plus I. So I'm multiplying each of these terms by 1 plus I, which is the interest rate. And then I'm going to subtract M. So I'm going to pay down another monthly payment and so on. So this would then be 1 plus I cubed. So every term here gets multiplied by 1 plus I squared. And then I pay down M, so I subtract M. And notice here we've got a pattern going on, so we're going to write that as X subscript N. This is going to be P 1 plus I to the power of N. Now these terms all have an M multiplying them, so we're going to factorize out the M. And then I have 1 plus I to the power of, well, when the subscript is 3, this is the power of 2. So when the subscript is N, this would be N minus 1. The next one down would be 1 plus I to the power of N minus 2. Notice this is now a plus sign because I've taken the minus M out the front. And my last term in this would be 1. Okay, so because at the end of this part, I always have just minus M because I factorized it minus M, it's going to be a 1. I have a nice term here, I have a sequence here, and we need to deal with this sequence. It's easier to deal with this sequence if I write it in reverse, if I write it like this. It's very clear that my first term is 1, and my ratio is 1 plus I. So I need to find the sum of that sequence. Just very quickly, let's derive our summation of a geometric progression. A plus AR and so on until the n minus 1. AR to the n minus 1, and nudge that up by 1, so I get AR plus AR to the n. Subtract the 2 and factorize. I'm going to get AR to the n, take away A, because all the middle terms cancel out. So my sum of geometric series is A. I'm going to factorize the A out here. So applying that to this situation, my A is equal to 1, and my R is equal to 1 plus I. Okay, so let's put that in. Xn is equal to P 1 plus I, just rewriting everything apart from the square bracket. Within the square bracket, we're going to have this formula. There's 1 here, it's being multiplied by everything, so I don't need the 1 there. But at the end of the loan, we know that Xn actually equals 0. So we'll go ahead and put that in. We're going to move this term across to the other side. Now it looks promising here because I've got 1 plus I to the n on both sides, but sadly they won't cancel out because this is tangled in a subtraction. Let's rearrange for monthly payments. Formula here lets us know our monthly payment if we know our loan terms, duration N, our principal P, and our interest rate I.